now I'll just have a quick few questions, address it to all the panelists. Before we go into the Q&A, the one is that is this cyclical down? I mean, is this in a down cycle in credit? Is it short term? It's going to last for a while, or it's a short term aberration in a larger part of a credit super cycle? What's the view of each one of you? If
can I go first?
Sure. Yeah, anyone.
Yeah, thank you. Definitely, I feel it is a short-term, blip in the overall, given the India growth story. I feel like, I mean, I'm a, I'm for me, it's a golden age we are living in for India, because I have not seen, growing up, I've seen the growth story of China and all of that. But right now, the world is looking at us. So, given our growth trajectory, and for that, definitely credit is required. So, in that sense, the trajectory of growth of credit, I feel it is definitely a short-term aberration, but definitely the structural changes has to come in order for better quality of extension of credit. So in that sense, so that less alarm bells go off in RBI. So definitely in that sense, it is a short-term aberration.
Sure. Others?
Yeah, can I go next?
Yeah,
sure. So personal view is that it's maybe a cyclical slowdown which we are going through, and last couple of years has been like coming out of maybe the COVID, and of course there was a liquidity infusion, cheaper availability of credit, so that definitely boosted the consumption and the growth, right? So maybe in this slowdown of the credit flow, we could see some slowdown in consumption, which will reflect in our growth numbers. But I think it's going to be relatively maybe much smaller, maybe short-lived. The poison which we see from the asset quality, I think it's as of now contained into certain maybe unsecured small ticket size loans. We have not seen a broader loss of income, right? We can say, okay, because of inflation, there has been eating up into the disposable incomes, but maybe absolute incomes have not been impacted like COVID or demonetization, right? So it's something basically, while we may see these asset quality issues because of the over leveraging thing, if you look at the portfolio size, let's say the credit bank or NBFCs, the total portion of such borrowers will not be less than, say, even 1%. When I say 200 lakh crores of bank loans plus NBFC. So it's going to be a relatively contained kind of a thing. And I'm sure, let's say, whenever, let's say, people repay their loans, they will definitely come back possibly to repay these loans which they have defaulted in the past. So hopefully the recoveries for the lenders in the years to come can be slightly better than what they possibly suffered during demonetization or during the COVID period. So believe that it is going to be short term, and we are going through cyclical slowdown, maybe not lasting more than maybe 1 year kind of a thing. Yeah.
Okay, sure.
Yeah, I'll differ a bit here. I think, see, 2-3 things have really helped the Indian economy. I think one of this is the significant government spending, right? And if you look at the current financial year, there were elections and all that. So there has been some delay in the government spending. Second is the massive consumption driven economy that we have become now. And this consumption to a great extent is also driven by credit, right? Today, I want a new iPhone for 1.5 lakhs, 2 lakhs. Nobody blinks an eye. Okay, buy now, pay later, right? So it's not the newer generation of Indians are also very different from what, maybe all of us have from maybe a little bit here and there, but broadly speaking, we would earn, then spend, right? That's been broadly the philosophy of our generation or this age, this thing. But the newer generation, they don't really wait for the income to come. The spending happens now, the income will happen later.
Yeah,
So
actually, I just sorry to interrupt. I was joking. So the retail consumer is like the government now. Spend first and see later. Yeah, sorry, carry on.
government at least have a fiscal deficit and other things to be worried about. I think the retail is more about, say, I'm young, I will somehow find a way to manage, or some may not be even thinking, right? So one is the government spending, second is the consumption, and the credit which is driving the consumption. The third, which is the biggest worry that I am seeing is, which is also corroborated by the data from NSE, BSE and SEBI and all that, is there has been a lot of borrowings which has gone into equity, right? So people may have not seen the down cycle in an equity market in the last few years, right? We have all seen multiple cycles and how long it takes to get your money back. And sometimes you may never get your money back. You just have to write it off. It's as simple as that. And if you're borrowed and invested expecting you will get 30%, 40%, or even say 10, 15%, right? You may not get that kind of a return and you still have to repay your loan. You still have to pay the interest on those borrowings.
Correct.
Right? And money going into cash market on good stocks with I would say an efficient management, good, clean, governed company, your money will still come back in different forms. Maybe dividend, maybe growth, may not be today, maybe over a few years' time. Others, let's say if you're putting in an FNO, it's an immediate loss, right? So honestly, I wouldn't say that it is temporary. We'll have to honestly wait and see. Whether it will turn around within 1 or 2 quarters, I still don't know. Normally, if you look at the first quarter, is generally a bad quarter any year for any organization in the lending space, whether it is a bank, NBFC, how big you are, how small you are, you can never match your JFM, never match your March quarter, right? That's been the historical challenge. This year also, the expectation was that the Fed has started cutting rates, RBI will follow suit, right? Elections have now sort of done and dusted. So there will be a lot more stability in the government policies. We also expected some reforms to come and all that. But the challenge was there has been food-related inflation on one side. And while Abhinav was talking on the good side of the telecom part, the flip side is the cost has gone up for all of us because it's more of a duopoly or maybe, just a handful of players who can decide the pricing. So the cost has gone up and it's across the board, right? And due to the wars and other challenges, despite India, especially, the Indian government doing extremely well on the crude oil procurement, there also the cost is not fully, we are not able to see a reduction in that significant cost, which is on the petrol and diesel especially, right? And the other big component is the US election and the results and the resultant US policy, which will happen. If the government, the second term is similar to a first term, then we could see that US will become more inflationary. They may not really cut rates, which will have pressure on all the currencies, including rupee. And the tariffs and other related challenges is one side, which will also impact Indian exports to US, especially on the pharma and other spaces. There and IT also. There could also be other related challenges coming out of those aspects, because it could also reduce the visas, number of Indians studying in Indians and Chinese are the maximum foreign students in the US, right? It could also affect the employment opportunities. So it could have a much larger impact on how the US policy spans out. So honestly, I would not say that it is temporary. We'll have to honestly wait and see for 2-3 quarters on how this pans out. But as a regulator, RBI has been warning this for the last 1.5 years. They're warning it in different forms. I think it came on the fintech side, then they went to the bank side saying be careful on the exposure, then they on the NBFC side, now on the MFI side. I think RBI seems to have a little bit of foresight, or the data that they have is much more than all of us have. I think they've been sort of trying to advocate a little slowdown. I think, honestly, the slowdown will be there for some time. The question is how it will come back, and whether RBI will be in a position to cut interest rates to spur the growth, or will the government spending come back, which will boost the economy? We'll have to wait and see.